believe Bitcoin is your best investment today. So the way people in the 80s treated gold as the store of value because they never trusted dollars, I think another generation of people think of Bitcoin and the blockchain it embeds is the store of value. If it's 5% of gold in 5 years, it's $25,000 per unit. This is a very risky investment. When we talk about $25,000, we don't recommend anyone put 100% of their holdings in this instrument. In the short term, I think you can think about how Bitcoin is valued based on, wallet growth and transaction activity.
So you're assuming a lot more expansive use of it in terms of being an actual currency.
That's right. If it captures, 5% of just the gold market, it's $25,000. But 5% seems like an awfully small number. Let's say it's 10 or 15. Then Bitcoin could easily be in the $100,000 range. This is a millennial story. So the average millennial is 25 today. The boomers were 25 in 1982. So what did the boomers drive from 1982 to the peak population of the boomers, which was 99, S&P 500? There's a lot of concerns recently about Bitcoin being off its highs. I think it's a really healthy consolidation. Actual use cases are being built around Bitcoin and blockchain. So I think the volatility we're seeing is really just a price discovery process. I think those who really sort of dismiss it as, hey, look, there's no tangible value for Bitcoin are really losing some perspective. It's not that different than in the 1990s, someone saying Amazon is worth nothing because they actually don't make money. And 20,000 by June is very reasonable.
By June?
Yeah, and then 25,000 by the end of the year. Because that would make Bitcoin look like past 50% correction. I think in December last year, there was this fear and need to get involved with crypto without really doing the work. Since the start of the year, there's been real authentic interest from our institutional clients, so we're still doing meetings and teach-ins and providing a lot of resources, but there's not this need to be like, okay, I gotta buy it and figure it out. So now there's folks really trying to understand what are the 5-10 year drivers, and that's the kind of holders you want anyways.
Bitcoin, let's say we think can reach 25,000. It doesn't require Bitcoin to go up every day till the end of the year.
Sure.
Remember, the 10 best days account for all the return of Bitcoin. If you didn't own Bitcoin for 10 days each year, you lost 25% a year since 2010. The notion of blockchain as a way to solve trust in the digital world has gained a lot of traction, especially out of consensus. And what investors aren't connecting is that you can't necessarily just say, well, I believe in the blockchain. Bitcoin and cryptocurrencies are essential to how blockchains operate in the securities. But more importantly, I think institutional investors have gained a lot of interest, and they haven't really come into crypto yet because there's still some regulatory uncertainty. But that sort of ultimate allocation into crypto as an asset class is going to be a powerful reason why Bitcoin rallies.
Bitcoin or U.S. equities here at the end of the year?
Between now and year end, we think the S&P can do mid to high single-digit gains, right? That would get to our roughly 3,000. And I think Bitcoin can easily do well beyond that. We still think Bitcoin can reach 25,000 by the end of the year. When Bitcoin's trading 30% below its 200-day, it's a huge bull signal because, one, we're nearing the end of a correction, but also if you look forward 6 months, you're going to do pretty well owning Bitcoin.
The narrative for Bitcoin, kind of looked questionable for a few months because there were regulatory clampdowns and people thought the protocol was broken. People were losing interest, but I think now we're sort of seeing, potential institutional participation again, bank infrastructure through MasterCard, Visa, and then the potential for an ETF. And I think this is, going to help Bitcoin break back towards the old highs, the all-time high.